This is a video tutorial or a small course where I'm going to teach you how I personally am able to make thousands of dollars every single week, every single month, which can ultimately be 6 to 7 figures every single year through futures trading on Blofin. Futures or leverage trading is just a form of trading where we are able to use the small amounts of money with leverage or margin essentially and trade as if we were using a lot of money. So by buying and selling, shorting and longing, which are terms that I will help to familiarize yourself with, these small little trades, we could make thousands of dollars per day, weekly, monthly, and that compounds into massive gains. So I'm going to pretty much go through everything you need to know on how to use Blofin, a complete tutorial on how to use the Blofin platform, all of the aspects of the platform that I use. And I'm going to teach you guys how you can trade and make money on this platform. And I'm also going to be showing you my strategies, my working strategies on how I am able to extract money from these platforms. They're probably not going to be very happy that I'm showing you how to consistently take money away from them. So we will have to see how long this video will last, if they make me take it down or whatever. And guess what? It's completely free. So like I said, I'm going to be going over everything: how to long, how to short, stop losses, types of orders, liquidation, rules to follow, my strategies, pretty much everything about this platform. In order to use this platform, what you will need to do is you will need to create an account. Use this link, which is in my video description. Open up an account. If you trade on my link, you are going to get cheaper fees, huge discounts, a lot of bonuses, deposit bonuses up to $7,000, tournaments, all these amazing things that you will not be able to get on other people's links. So I first suggest that you use my link below, create an account. If you are in New York, you might have difficulty using this platform, so I would recommend using a VPN like NordVPN. Any VPN is going to work. Put your country in Mexico when you create the account and you're going to be totally fine. But everybody else should be able to log on, trade without any type of issues. If your state is not allowing you to use this, just use a VPN. Now, the first thing is you will need to send money to this platform. So you cannot buy crypto on this platform. So that means you need to have crypto first. You need to buy it on Coinbase, Kraken, whatever exchange you use, and send it over here. And the way you do that is you are going to deposit crypto. You click deposit and you send the coin that you have that you want to send over here. I recommend that you send USDT Tether, which is a stable coin. This coin will always remain at $1 because it's a stable coin. That's what it does. A lot of traders, what they will do is when they are taking profits, let's just say you have a big position in Dogecoin or some type of coin that you want to take profits, you sell it and convert it into Tether, USDT. And then you wait for another time that you feel is best to deploy the stablecoin back into the market by converting it into a coin of your choice. So when people take profits, they sit on stablecoins, they wait for a particular market event, market opportunity, and then they swap their stablecoin for a particular coin of their choice. So you're going to come in here and then you're going to click the network. If you're using MetaMask and you have Ethereum and you're on the Ethereum network is going to be ERC20. TRC20 is the Tron network. BEP is going to be Binance Network, Polygon, AVAX, Solana. It goes on and on. But if you are able to choose the network of your choice, I recommend TRC20. The Tron network, it is a very fast network, faster than Ethereum, and it has cheaper fees. But you need to make sure that you are on the correct network, that you are sending it to the correct network. If you do not make sure that you are sending it from the correct network to the correct network address, you will lose your crypto. So what you need to do is if you are depositing any crypto onto any exchange or sending crypto anywhere, always do a test. Test $5, $10. Make sure you are sending the proper network. from the proper network to the proper network. So you're going to copy this. And if you're on some type of regular exchange, you're going to go to that exchange. You're going to click withdraw. So let's just say you have Tether on that platform. Then you're going to copy and paste the address that you were depositing. We were on the previous screen where you're depositing. And look, it gives us an address. We copy that. We essentially go to Coinbase, wherever we're transferring from. We would click withdraw and we post that address there, and we click on the correct network. The networks need to be lined up. And then of course you put the amount, and then you continue. Then you move on to your security things, which is probably going to ask you to do. If that is not enough information for you to figure out how to withdraw and deposit crypto, you should go to YouTube and type in how to withdraw crypto from whatever exchange you're using. Coinbase is going to give you full tutorials on how to do so. Let's move on. Now, once you get crypto into the account, it's going to be either in the funding account. It's going to be in one of these accounts. And what we are going to want to do is we're going to want to go ahead and click transfer. We want USDT to trade. That's how I trade. I trade using USDT. USDT is going to be the collateral to open these trading positions. So you will need USDT. If you end up sending spots like Dogecoin or XRP or Solana to this, it's okay. It's still going to work. It's going to be totally fine. We can convert it to USDT, but I'd recommend that you would convert it to USDT from your main exchange that you are sending cryptos to. Now, let's say that we have the money here. It's probably going to pop up in funding. So what we are going to want to do is we're going to want to transfer from funding to the futures account. Make sure you open this tab, click futures account, and then you're going to click transfer all, or however much you want to transfer to the futures account. If you only want to risk a certain amount of money, but you want to send a lot of money over here, only send the money that you are willing to risk or trade with, potentially even lose, to the futures account. Then you hit confirm, and then it's going to be in your futures account. Now, very simple. We can now begin to start trading. So what we want to do is we want to click on futures. We don't want to click on markets, buy crypto, spot, copy trading, earn more. None of that. We don't want to click on that. All we want to click on is futures. So your screen should look something like this. And what you can also do to make it black, something that I personally do, you will see in the top right corner a moon button. Click the moon so that your screen is going to be black like this. So we have now landed onto the Bitcoin page, which is the Bitcoin, which is the currency that is default. This is the default coin that we will be trading. As a beginner, if you are a beginner, I only recommend that you trade Bitcoin. If you want to make money consistently with futures trading, only trade Bitcoin. If you can become a very, very, very good trader with Bitcoin only, then eventually you can move into some altcoins using these strategies. So here we have Bitcoin. We have this whole screen, and there is a bunch of different options on this screen that we have. So let's go over to the right side here, and let's go over all the orders and the things that you need to know. So there's different types of leverage. You have cross leverage, and then isolated leverage. If you want to read the great details and the fine print, you can do so on your own accord. But essentially, what cross and isolated means is that isolated means that whatever you put onto that trade, that's the maximum that you can lose. But if you were to change it to cross margin mode, what it means is that it can pull from other accounts, or can pull from the outstanding balance that's not in the trade itself. So let's just say you put $1,000 on the trade on cross margin. If the trade goes against you to a particular amount, it's going to start pulling additional funds from your account to make sure that you don't get liquidated. As a beginner, I would not use cross leverage. I would only use isolated leverage, which means that whatever you put into the trade, that is all that you are risking. You cannot lose any more in that trade. For instance, if you were to put cross leverage on a altcoin that's highly volatile and it goes against you so much, in one candle, like it goes down 99% against you or something crazy, it can wipe your whole account. Like, let's just say you put $50,000 and you were shorting and you only put $1,000 on the trade. It could wipe potentially a $50,000 account very quickly. It could. So I would only use isolated leverage. To the right of isolated leverage, we are going to see a leverage amount, which on Bitcoin can go up to 150x leverage. Let me explain what these numbers are and how it works. So let me give you an example. If I were to put $10,000 on the trade, like if we see I'm dragging this little slider over, I have available $28,000 on this particular account. So if I were to put $10,000 on a trade, this is 10,144. My liquidation price would be 57,000. If I was longing, it shows you my liquidation price, what it would be if I was shorting. But if I put 10x leverage on $10,000, they are basically allowing me to trade with $100,000. That's essentially what it means. It's like trading with $100,000. And depending on how much it goes up or down, is going to be the same amount if I was trading $100,000, buying Bitcoin with $100,000. Essentially, that's kind of how it works. Now, here is the thing. If I long it, which means I'm betting on the price to go up, I'm going to explain longing and shorting in just a few moments. But if I were to click long right here, add market, 10x leverage, it's going to open the trade automatically right away. So the $10,000 I'm putting onto the trade, that's the max that I can lose is $10,000, but it's like I'm trading with $100,000. If it goes up 10%, guess how much I would make? I would make $10,000, which is actually 100% of my position. So the trade goes up if it goes up 10%, we multiply that by 10, which is 100%. So I actually make 100%. So the $10,000 I put in, I make 100%, which is $10,000. But what if it goes against me about 10%? Well, guess what? I would lose all of that money if I was longing, because I would be down 100%. 100% is a total value of something. So I would lose it. I would lose $10,000, but that's my maximum loss. So everything is multiplied by this number, the amount of money that you're trading with and the gains and losses. We get liquidated when a position goes against us 100%. Blofin and other platforms will allow it to get close to 100%. So there's going to be a liquidation price depending on if you were isolated or cross, which changes that. We're going to keep the mind of isolated only. We're only going to be talking about isolated. Now, if I were to do 100x leverage, which every time you get into a trade, make sure you confirm the leverage, because there's many times where I put huge positions on 100x leverage and I had to close it out quick. The fees are also multiplied the higher the leverage you go, because you're using essentially a lot more money. So if I'm putting $10,000 on 100x leverage, it's essentially that I'm trading with $1 million. So it's like I'm trading with $1 million. So every 1% is $10,000 if I was trading with $1 million. But every 1%, we multiply it by 100% if it were to go up in our favor. It's going to be 100% the whole position, which means we double. If something goes up 100%, we double it. It also means that if it goes down against me less than 1%, because there's fees and there's liquidations, they occur a bit, especially with isolated, before 100%. When they go against you, keep that in mind. So it could actually be 70, sometimes 50% I've seen, where exchanges will liquidate you if it goes against you when you're on 100x leverage. Don't do 100x leverage unless you are trading on cross and you're using really small amounts of money. But even then, just don't do it. The maximum I trade with most of the time is going to be 10x leverage. Even that is very, very high, by the way. You will see other people using crazy leverage. They're stupid, they are poor, and they don't make any money. Do not follow what these people do. So I hope you understand the leverage. Now, whenever we open up a trade, there is going to be opening fees and closing fees. So keep aware of that. And if you want cheaper fees, you use limit trades. I personally don't recommend limit trades. I don't. Let's get into what these are. Market, limit, trigger. So market order and a limit order. These are the two different types of orders that there are on any trading platform in the world. All they have is market and limit. Market order is an order where you are immediately put into a position or put out of a position, depending on your opening or closing the position. A limit order, when I open the trade, we can select the price that we want our trade to be executed. So look, I click the limit order and it's right here. It will only execute if the price comes to this level. I'm going to click on the X and remove the limit order because I don't want that trade. However, limit orders, the fees are much, much lower. So if you have the patience, use limit orders. I personally don't. I do market orders in and out of a position. Let me change the leverage really low here. And this is like a $200 trade. As soon as I click buy long, it opened the position immediately. I don't have to wait. Sometimes you go set limits and then the price doesn't hit the limit order and then it goes way up or way against you or whatever. And you miss out on the trade. I'm going to exit out of this position here to close it. So I personally recommend market orders. Isolated leverage. Adjust the leverage accordingly, which I will get into the exact leverage you should be using as a beginner when you're learning. And that's essentially limit and market orders. There is a thing called a trailing stop loss. I don't use these, so I'm not going to go into them in great detail, but essentially what they are is when the price pumps, it moves your stop loss up and it will pull you out with a particular variance, whether it's 2% or 3%. I'm not going to get into it, honestly. Now, when we are executing a trade, there's going to be something here on the bottom. Reduce only. I honestly don't know what that means. It probably just means reduce position. I don't use it. I'll show you how I reduce positions another way. But when you're entering a position, which is going to be a part of the strategy, once we get into that, there is a thing that says TP/SL that stands for take profit / stop loss. So you can set a automatic take profit and automatic stop loss with every trade that we open. And the way to get these particular numbers versus typing them in, which can take time, is we right click and we're going to see copy price. We're going to paste that into there. And then we're going to take this low here. We're going to copy this area here, copy price. We're going to paste that and we're going to buy long. Okay. So we see that my take profit, if the price comes all the way up here, it's going to automatically pull us out the position and take profit. And if it goes down against us to this level, it's going to automatically pull us out with a stop loss. I'm going to exit this position by closing the position now. So buy long, sell short. What does this mean? What is shorting? What is long? Well, long is essentially buying. Shorting is essentially selling. If you are long on something or we're going to open a long, we're essentially wanting the price to go up. If the price goes up when you enter a long position on any type of futures or leverage platform, and it goes above the entry, the level from which you entered, you are going to make profits. If you click short or sell from the level that you entered and it goes below it and it crashes or whatever, you're going to make a lot of money. So it's essentially betting on the direction of the price, where we think it's headed. So if you think the price is going to go down, you're going to make sure you have your isolated leverage. You're going to make sure you have the leverage properly. We're going to mark it. We're going to drag it to how much we want to put into the trade. Then you click short. Now, when entering a position, what I will do, we're on the PC here. The phone is going to be very, very similar, by the way. Just a little bit different. You're going to have to figure out your way around the phone, mess around with it until you can execute everything exactly as we are seeing here. But to determine the amount that I want to put on a trade, I click, hold, and drag this slider to a particular level. So when it says cost, the cost is the total amount that I'm putting on the trade. So right here, the cost is $6,800. So essentially, if I were to open this position, it'd be a $6,800 position multiplied by the leverage that I choose. So if I click short and the price goes lower from this particular level, I will make money. If I press long and it goes up, I make money as well. That is pretty much all you need to know as far as the functionality on these trades here. But there's one more thing I want to show you guys. So I'm going to open a position here. 1x leverage. I'm putting $1,000 here. I'm click selling short on market, which automatically puts me in the position. Now on the bottom here, on the bottom, there's several things that you need to understand and know. On the bottom here, it's going to say the position we are in, how much leverage. It's going to say how much Bitcoin that is. It will show us how much Bitcoin that is. It's going to tell us our average entry price. So this is the price from which we are entered. The margin is going to tell us how much money we've put onto the trade. So I put $1,300 in the trade. That is true. That is correct. The P&L stands for profit and loss. So we can see that when this thing is green, we are in a profitable trade, which is it's pretty much just flatline zero at the moment. My estimated liquidation price is if Bitcoin were to go $126,000 with this $1,000 position on 1x leverage, which is about 100% move from our position. The mark price is the price of what the price actually is on Bitcoin, the current price. And the margin ratio is basically the margin ratio to the amount of money that we have onto the trade. Once it goes below like 120%, it will liquidate you. Now, we have a couple of things here. This is something very important. When you're in a profitable trade, a lot of times you don't want to just close out the position fast and entirely. What you're going to want to do is you're going to want to close out maybe 10% of that position, or maybe you want to close out half the position. So you're going to click here. It's going to say 10%, 20%, 50, 100. You're going to click on one of these and then you're going to click close. It will tell you the estimated profit and loss if you close this trade. So since we are essentially at a loss now, we shorted and the market is going up a little bit, we're losing. I'm going to close 50% of the position, essentially reduce my risk if this were to be the case. I click close, then it's going to put it to a limit. So it has to come to this particular level we want to close out, or we can drag it above the price at any time, which will convert it into a market order. Look, I'm going to drag it above the price and then it automatically gets executed into a market order. If I want to close out the entire position very quickly, you click close all, and I would make sure that you have 100% here. So there it is. We exited a trade. Let me go ahead and open another position. I'm going too long in this case. Remember, if I want to exit 50% of the position, I can close it here. On the phone, I believe it does a market order compared to limit order when we're trying to scale out of a position. You can also click reverse, so you can reverse the trade. So let's just say that we are long here, but we want to short. You can click reverse, and it's going to convert this trade into a short position. Same amount of leverage, same everything, and just reversing it. Most importantly, what you're going to want to do is click on TP/SL in case you got into a position without manually adding before the trade the take profit and stop loss on the right hand side. You are going to want to click this and add the stop loss or the take profit trigger. So we're shorting here, and let's just say I want this to be my stop loss, this particular area. I'm going to copy price. I'm going to click on stop loss trigger. I'm going to paste. Then it's going to appear there. But something very interesting, when you paste it, it will show you how much money you will actually lose if that position does that. You can also put a take profit. Let's just say I want to take profit here. Copy the price, come in here, paste. It's going to show me I'll make $5 if the price comes to this particular level, which it looks like it's kind of doing at the moment. But if you want to remove that, you can just X off the take profit. You can X off the stop loss and then manually add it. If you want to exit the position, you can always click on the X with this current position line. You can click close all. These are all ways to exit a position quickly. Okay, now that I've showed you how to use Blofin, we're now going to get into the strategy part of it. I'm going to show you my strategy on how I'm able to extract a lot of money every single week on Blofin. It's something really cool. On the bottom, you're going to see positions. That's what you're going to want to click when you want to see your open positions, but you can click on order history so you can see all the trades. Look, we made a whole bunch of trades so we can see like $1 there, 1 penny. I mean, nothing there. But if we scroll down, we can see, look, made $800 here, $800 there, $2,000 there, $1,200 there. These are just recent trades that I took. It's just proof an example that I'm actually doing this. So when we are trading, when we are executing, we need to use technical analysis. If you don't know how to do technical analysis, you can go to YouTube and start learning how to do that, because this tutorial is for people that have somewhat knowledge on how to trade. And already know essentially how to do a little bit of TA, which is technical analysis in short. Now, Blofin is the platform that we are going to be executing our trades on, but we are going to be executing our analysis on TradingView. TradingView is the #1 platform where you can pull up any crypto or stock. I'm not going to get into a tutorial on how to use TradingView. You will have to go to YouTube and type in TradingView tutorial, how you want to perfect it. But you could do your technical analysis on Blofin. There's no problem. Okay, so let me share with you my strategy on how I am able to extract money. Rule number 1. I'm only taking long positions. In the current moment, we are in a bull market. So the market is very bullish. It's very strong. We're constantly pumping. Every type of pullback we get, any type of correction we get, we immediately bounce back up, especially with altcoins. So I'm only looking for long positions. And I'm only looking for long positions when there is a big crash or correction. In this type of market, Bitcoin will crash approximately 20% maximum. So if we take a look at this, is when the Bitcoin ETFs went live. Bitcoin pumped to 48,000, crashed all the way to 38,000. Measuring from the top to bottom, which I'm using the measuring tool, we see that was a 21% correction, which immediately caused an 89% pump. If we pretty much take a look at any crash or correction for Bitcoin, look, 21% correction there, 21% correction there, and every single correction, look, pumped about 98%. Look at that. Interesting, huh? Look at big correction here. This was 22%, and guess what? It pumped up 57% there. And we could just see this pattern happening over and over and over again. And as long as Bitcoin is in a bull market, which we can ascertain by something called the EMA 200, and it's just called the moving average exponential. This is an indicator that we can add through TradingView, and it's going to default be 9. I'm going to change it to 200. So on the daily time frame, as long as anything is above the 200 EMA, that's pretty much considered a bull market. Some people are also argue and say that the weekly time frame, as long as that's above the 200 EMA, it's a bull market. I would say that that's probably more accurate. The weekly time frame, as long as it's above a 200 EMA, we are in a bull market. But definitely the daily time frame is going to be very, very important. If we are trading under the 200 EMA consistently, I will probably be looking for short positions. But as long as we remain above the 200 EMA on the daily time frame for Bitcoin, I will be looking for long positions only, because the trend is up. We only want to be trading with the trend. Have you ever noticed that it's like you keep making these trades over and over again, but you're getting stopped out and losing constantly? It's because you're trading against the trend. A trend is defined by higher highs and higher lows. And if we are seeing higher highs and higher lows, that's an uptrend. But if we are seeing lower lows and lower highs, that's a downtrend. We want to be trading with the trend, because the trend will continue for a significant period of time, and it's so much easier. You'll see people say easy mode this. It's so easy. You can pretty much just long every time and it goes up. That's going to be consistent in a bull market. So the easiest strategy that I can teach you guys, all ladies and gentlemen, everyone, is to long crashes or corrections. Like there has to be a big crash. There has to be a big correction. This is when we want to get involved, because whenever there is a big crash, one there, big crash here, big crash there. Whenever there is a big crash, guess what always happens? The market bounces up. Look at this, big bounce here, big bounce there, big bounce there. And if we measure it, look at this bounce. From the bottom to the top, 16% bounce, 12% bounce, 12% bounce there, 20% bounce, 25% bounce. Every single pullback is equaling a big bounce afterward as a consequence. So we want to catch these bounces. And the reason why these bounces happen is because the price is bouncing into where there's a lot of buyers. What causes these bounces is a lot of institutions and big whales they are buying. Institutions and whales, they only buy discounts. So the way it works in crypto is, for instance, let's just say this is our resistance. Let's say that this is our support here. Above the middle between support and resistance, this is called a premium. This is a premium. Under the 50% level between the support and resistance, that's called a discount. If you were to have a retail store, you could only make profits if you buy things at a discount and you sell them at a premium. Buy low, sell high. It's the most fundamental trading strategy in the world, which is something we are trying to do here. Something I'm trying to teach you. The reason why there's always bounces is because there are people always going to buy the dip. No matter how bearish things are, no matter how terrible things look, there's always going to be people buying the dip. That's why there's bounces all the time. And the reason why things crash and go down and sell like this is because people are selling at a premium that they bought in a discount. That's how it works. They buy low and sell high. That's how it works, ladies and gentlemen. And if you can understand that, then you will understand when it's best to do that. So when it comes to technical analysis, you want to be able to learn how to put trend lines in levels where we see are being touched more oftentimes than not. Look at this for Bitcoin. Look at this peak comes here and then comes here. We can draw a valid trend line if we have two levels to go off of. So if we draw from here to there, look at every single time that this level is touched, the price crashes and goes down. You see that? So this could be a good area to sell from if you were to buy at a discount. Look at this level here. Doesn't have to be perfect, ladies and gentlemen, but you want to draw a level where you're going to get multiple touches. So we get touches here, touch there. So we can see that Bitcoin came to this support, and bounces here. That's how you can kind of find the levels that you want to buy, right? You want to draw lines and figure out where the price is going to, creating trend lines, learning support and resistance. These are basic things. I'm not going to necessarily get too deep into them, but you want to essentially be buying at support and selling at resistance. That's kind of what you want to do. And then if you become really good as a trader, you could long here and then short here. Not only closing your long position, you could short at these levels and make money while it goes down and crashes. But it's very risky and something I do not recommend. So to keep it very simple, you only want to open long positions when there is a big crash. When the market is pumping really hard, pumping, you don't want to be opening long positions unless you are riding with the trend and you have a tight stop loss. You know you're in validation. You know where you're wrong. You know where you're going to pull out. You want to just wait for some type of strong pullback. Like Bitcoin, for example, just pumped up 13%. Oh no, 15%. Wow. Bitcoin pumped up 15%. Right? So after a 15% pump, it has now just gone down very quickly, 4%. Completely normal. If you were to have long this, you would be down now 4% with the leverage multiplied by the leverage and the amount of money that you're using. So the chance of the market coming down after a 15% pump without any single pullback is very, very high. So you never want to chase a long position there. What you want to essentially wait for is some type of strong pullback, like any flash crash, like 10%, 15%, 20% crashes for Bitcoin. Those are going to be good times to attempt long positions, knowing that Bitcoin on maximum, on average, has not really exceeded 22, 23% in a pullback. And every time we get to that sweet spot in those levels, those are the levels that you want to trade. Now, looking at the 30-minute time frame, the 1 hour and the 4 hour, all of these time frames together are going to help us to understand, are going to help us to see our entries and exits. These are the time frames that I recommend that you get familiarize yourself with. But essentially what you want to do is you want to mark out like the low on the 4 hour time frame and some recent highs, like maybe this level here, these two levels here, and we can see that we have resistance and support. It's quite clear. I'm going to show you now how the market kind of works and how you should think about the market and executing trades. Now, this is my price action model that I teach my students that are in my mentoring programs. This is the price action model that I particularly like to use. I love to use when trading. So here we have a key support, key resistance, key support. The way the market will move is at resistance, it will come up and maybe break resistance, come back under. It will sell off and usually come back to the support or somewhere near it. There will be some type of pullback there. If the market pumps up, comes all the way back down, maybe breaks it, comes back above, the market will typically reverse and come back up near this level, or probably to this level. So I want you to understand another thing as well, that whenever we have a resistance, the price holds above it and breaks out of it and finds acceptance above a resistance, it's very likely that there will be something called a breakout, and it will usually break out to that next key resistance level where there's going to be stop losses and liquidity and people selling for a premium. That's why we get these pullbacks at these key levels. And it's going to be the same thing, a breakout on the lower side where we have a support and the price comes to the support, breaks under support, holds under, and then it's going to crash probably to the next key level of liquidity, somewhere over here to here. So the way breakouts work is if the price breaks above and holds above a key level, it will usually break out and break out to the lower side. Same exact thing. These are the breakout models. Sometimes there could be fake breakouts where it pumps back above, it becomes this level, or maybe it breaks above a little bit and then comes back under. This is called a deviation or a fake breakout, as I like to call them, or swing failure patterns. You can call them whatever you want. But we have a break at the level, but it comes back under the level. Like, look, we have a break at the level, but comes back above the level. This will usually revert and come all the way back up to this level. These deviations will typically move to the opposite side. So here we have deviation. It will come to the opposite side there. We have a deviation here, breaks out, looks like it's going to crash, but it regains support. Then it will come back up. This will happen over and over again in the market. This is kind of how the market works. And I want you to understand that. Where I like to typically enter my positions in this is when there is a deviation. These are going to be really high quality setups, which means that I have probably 70 to 80% chance of winning the trade. If you're just longing because there's a small little pullback here, or you just feel like longing or entering a trade, you will probably lose. You will probably get stopped out. It's not going to go in your favor. But if you trade kind of at these extreme, you wait for key levels or extreme levels, extremities as they call it as well, to be deviated, to be hit, or you wait for a breakout. These are going to be the only times that you're going to want to trade. You don't want to trade in the middle. Never want to trade in the middle. We have a key resistance, key support. You want to wait. If you want to go long in a bullish scenario, if we are truly bullish, if we have resistance, we break above resistance, hold above the resistance, you can go long there. And your stop loss would be somewhere under here. You always want to give your trades breathing room, because a lot of times there could be some type of news event where it'll like crash it or it'll pump it, and it will take your stop loss and then go in the way that you had predicted. So always give your trade some breathing room. So let's just say the price breaks out here, starts going up here, we enter here. My stop loss could be something here, somewhere in this region here, because if it was breaking out and it deviates back under, you definitely want to exit your position because it's no longer breaking out if it comes back onto this level. The same thing here. Let's just say we think it's going to crash. It breaks out, starts breaking out. We enter our position here. We could put a stop loss here just to like give it some breathing room, because sometimes trades, they will come back above here and then come like just dance around and then they'll crash. So just give it breathing room with your stop loss, and it breaks out and then you catch the move, you take profits. But in the case where it breaks out, it looks like it's going to crash, you enter here, your stop loss there, it comes back above support, starts holding the support, you can cut it early. Depending on if it looks like it's actually going to bounce, you cut it early, or you can let yourself get stopped out and then you re-long, because look, it's now deviating back onto that level. So we were short here, we were thinking it's going to crash, but it regained the level, so we cut our short, we flip long, and then we ride it to this level here. Then if it starts breaking out, holding above here, we keep riding it out. But if it deviates, if it breaks out, deviates, starts holding under here, we cut it because it's weakening. That's kind of how the market's going to work. Another strategy that you guys can implement is a trend following system. This is kind of like a ranging, system, trading in a range, waiting for expansion in a trend following system. But this is kind of one way to trade it. Another way to trade it is in a trend following system where you have the price is just very strong in a trend. When something's very, very, very strong in a trend, it's a really good time to consider trying to get on the dip. So like for instance, if we're in a bull market, you want to wait for a strong pullback and then get in on the dips, and then you're going to just ride the wave up. You only buy on the pullbacks or the dips, you don't buy when it pumps up really strong. You wait for that pullback and then you get in. Let me give you an example. So here we have Bitcoin was a very strong trend. It just kept pumping infinitely. So when you see something pumping infinitely like this, I would just get involved and get involved in the long position, because if you get involved, you are exposing yourself to like this massive strong trend, and then you could have tighter stop losses to pull you out if it were to be the case. But look, if you would have longed here, it never came and touched this level. It never came and touched this level. Never even retested any of these levels, except here. Look, we had a deviation. We had the key support, deviated, came back above, and then look, it ripped up. So these deviations are like really, really good times to get involved, and they're also going to be involved in these trend following systems. So look, there's a dip, you get in on the dips, you wait for the dips because they're going to give you extra good entries. Look here, very strong market, you get a crazy flush happen very quickly. You want to long those positions, but you have to be very careful. Depending on the leverage, you can get wiped out because these dips and crashes can be very, very, very strong. And whenever you see a big dip and crash and correction, you want to wait for like a massive wick, and you would just put your stop loss here. That's where I like to do it. If you end up getting stopped out again and it regains and holds the level, you just re-enter and you put your stop loss at that next low. Sometimes people give it more breathing room, but you want to definitely be trading as a beginner like 3x leverage. I wouldn't really exceed that. 5x leverage, like that's really high. As a beginner, I would trade with 3x leverage. Once you become really good and you know when to get in and out of positions very quickly, then you can use like 10x leverage or something. But see, we had this key support, and then they deviated. They took out all those stop losses, which caused these quick reversals, and then boom, up. Here, look at this. We have resistance. They deviated the resistance. They tried to break it out, but then look, it crashed all the way down to that next level. It's like I told you. Deviation will always usually come back down to this key support. And if there's a deviation to the lower side, it will usually always come back up here. We want to be trading here. We essentially want to be trading here, but you want to wait for confirmation. That's ideally you want to get the top, but don't be super aggressive. Wait for the confirmation of the deviation. Wait for the confirmation of the move. Not just because it crashes down, do you want to long? No, you want to see it start to bounce up and form higher highs and higher lows on like the 5 minute, 3 minute, 1 minute time frame. That's going to be the confirmation that we're beginning to see the uptrend. We want to be riding the uptrends, higher highs, higher lows. We only want to be looking for long positions. When the market is bearish and we're in a bear market, then I'll make a video tutorial showing you guys how to short. That's something you guys can also figure out on your own. But in a bull market, only take long positions as a beginner. I pretty much only take long positions as a professional because it's much easier. There's less stress. Because in a bull market, they can pump the market up 10%, 20%, 30% on any given day, on any given news. And the worst case scenario is Bitcoin is crashing 20%. And we don't want to be buying after a massive pump unless we have our stop losses and our invalidations. Like if we are chasing a massive pump, it's because we think the trend is really strong. We are breaking out of resistance, holding here strong. We can get involved there. That's fine. But we have a stop loss, an invalidation, so that if it deviates and we're wrong and it crashes, we're pulled out of the position and then it starts to bounce up again. Then we re-enter there. So you are going to take losses. There are going to be losses when you're trading. I take losses all the time. The difference between a profitable trader and a non-profitable trader is a profitable trader has small losses compared to an unprofitable trader. They have a bunch of great wins over and over and over, and then they take one big loss, which wipes out the entire account. If you're using small leverage on Bitcoin, it's going to be pretty much impossible for you to get wiped out or liquidated. That's why I'm asking you guys to follow these small little rules, which are going to help you to be consistent and make money consistently. What's very cool about trading is that out of 10 trades, like let's just say you're 50% profitable. We're looking for a high risk to reward ratio all the time. And the way that works, the way that essentially means, what that means is that whenever we're entering a trade, if I can go here, I'm gonna give you guys an example, long position. Let's just say I enter the trade here at this white line. The red line is gonna be my stop loss, but the price comes all the way up here. So I did long here, by the way, and I took profits a bit earlier. But for instance, if it pumped all the way up to here, we can see our risk to reward ratio is at 2.8. So we're making basically 3-to-1, which is a really good risk to reward ratio. You always want to have a higher risk to reward ratio, at least 2-to-1 or 3-to-1. And that's going to be determined based on your stop loss and everything and how much your loss is. You don't need to calculate your trades with a risk to reward ratio, but it's a good way to understand how you should be taking trades, when you should be taking trades. and how much profit you should be risking to make profits and how much you're risking to make profits. So in a profitable trading strategy, every single one of our trades is going to have a high risk to reward ratio compared to losses. So for instance, if I were to lose 5 trades out of 10 trades, that means I'm 50% profitable, which is actually pretty good. I'm more in the line of like 70 to 80% sometimes. If I'm on like a good streak and I'm very consistent following all of my rules, I'm like 70 to 80% wins because I'm waiting for very extreme levels, and I'm only taking cautiously trades. I'm not just randomly opening trades because I feel like it. But if you have a 3-to-1 risk to reward ratio in every single trade and you lose 5 trades, you're actually going to still be profitable. You're still going to be highly profitable. How is that possible? Well, I'm making 3-to-1. So I'm taking a loss. I'm only losing one part, but every single gain out of those 5 trades that I did win, I'm winning 3 to that 1. So I'm winning basically 300% compared to the 1% from what I'm risking to actually making. Something else to keep in mind. Something else I look for in a very strong trend, and then we get like a 4%, 5% dip. This is probably like a good long entry actually for me. But look, we see the market dip, and then now after like a big flush kind of out, we're about to see a deviation from this support here. We're starting to see a lot of consistent green candles, and it's holding up. This could be a good scalp long position where I'm only a scalp is something that I actually like to do more oftentimes than not. Is I'm looking for like a 1% move, like a small move in the market. Minimum, I'm usually looking for 1% moves for Bitcoin with leverage, which can be pretty good. But I'm looking for like a 1% move and then I'm out. If you guys can look, and Bitcoin will move like up and down 5% every single day, right? Sometimes 10%, sometimes more volatility, right? That's what volatility is. More movement up and down. A lot of movement, a lot of spontaneous movement. That's kind of what volatility means. But if Bitcoin moves up and down 5% total, which is 10% total actually, all you need to do is look for a 1% move. You can catch 0.5% twice, or you can catch a full 1% move. And that's going to happen when you see a very strong move and then you start to see it reverse and you start to see higher highs and higher lows. It starts to look like it's going to bounce. And I can put my stop loss here, or I can put it a bit lower. Because if I were to do a tight stop loss, which is going to be okay in this instance, my invalidation is here. And more oftentimes than not, if I end up getting stopped out, it's going to go much lower and then I could just retry. So you have to understand, after a 5% move, in most cases, especially in most bullish environments when there's not a lot of crazy bad news out there, after a 5% crash, 10% crash, that's when we're probably going to see a 1 to 3% bounce. That's when we're going to see a 1 to 3% bounce. So you can look for that. You see a very strong pump, a very strong trend, which Bitcoin just pumped up about 15%. We're getting our first pullback, about 5%. We're starting to see it bounce up. This could actually be a bottom. Like, look at this. Here we have a key support. Now we're deviating. We've regained the support. I trade on 10x leverage. I'll put $5,000 on the trade. I'll open a market position and I will copy this level here. I'm going to come into my take profit stop loss. My stop loss, I'm going to paste here. I'm going to lose $300, but if it goes up to here, I'm going to make $1,000. So I'm risking $300 to make potentially $1,000, a couple $1,000 here. I don't really care about this trade. I'm just kind of doing it to show you guys. But it's another strategy that I will implement if we are in a very strong bullish market and we're just getting a regular pullback, not off at any type of FUD or news. After a 5% or 10% pullback, that's typically when we will see for Bitcoin some type of bounce. So you could also do the 3x leverage and do a lot wider stop loss than this, because a lot of times your stop losses will get tested and they will take the stop loss, then reverse it on you. So I would say 9 times out of 10, it's actually better to do a wider stop loss, let the market breathe. And then when you see your 1% to 3% goal, whatever the goal is for you financially, then you can take your profits. And you also, another thing that you guys must understand is that if you guys catch a long position and the market moves fast and moves very strong and it goes in your favor, I like to take out 100% of that position. I'd like to be done for the day, especially if I catch a 3% or 5% move, I'm done. And if it gets bigger than that, yeah, I'm definitely done. But if you think you have a bottom entry, or you think that it's going to go in your favor a lot more, then what you could do is that you could just scale out a position, maybe 50%, secure 30% of the profits. And then when you are in a winning position, another thing you need to do is, I like to always do, is I like to move my stop loss to break even. It's going to be hard to show you guys here on live, but let's just say this pumped all the way up here. We see my entry is here, and let's just say, well, let's move my stop loss all the way back up here. We'll move my stop loss here. You can actually drag and hold the stop loss to bring it to a particular level, adjust it, and move it further and back. But what I will also like to do is when a trade moves in my favor significantly, I will drag the stop loss to the exact entry price, which reduces risk entirely. So if the price were to crash or go to zero, I will get stopped out automatically at my entry price, and I don't lose anything except tiny little fees. You could even drag your stop loss a little bit above to actually secure those fees so you actually profit. This is something that you guys will have to experiment with, create your own strategy, but these are things that I'm using. This is how I trade. Little strategies that I'm implementing. And look, we can see from when I just talked, the trade is now up $50. So it's up a little bit. I don't really care. I don't really know if this trade is going to do what it's going to do, but it doesn't matter. And it's okay. You're going to get stopped out. You're going to be long. You're going to be wrong a lot of times. But if you want to start making consistent money with this, you're going to need a proper education. I have a mentoring program using a trading indicator like Algosniper. You guys can try today for $1 at algosniper.com. Is also going to help you. Like, look, it gave us a buy alert for Bitcoin at 58,000, and now it's selling. It gave us a seller and it's crashing. So these are great tools that you can use. They're very cheap to help you to understand when it's best to buy and sell when using Blofin. So Algosniper, I have a mentoring program. I have courses, a whole bunch of different things. You guys can DM me on Instagram. My information is going to be below. I also have trade alerts, so you guys can follow my signals as a profitable trader for futures. These things are going to help you as a beginner, but you will need education. And if you don't want to go the educational route, the proper way, if you're really trying to learn a skill here, you definitely need a mentor, one who's profitable. You will have to create your own strategies. You will have to create your own things that through trial and error, you're going to have to figure out how this works. And as a beginner, I recommend that you use very low leverage. Like if you're a complete beginner, you have no clue what you're doing, use 1x leverage, just use like $100 or something small. And if you can be consistently profitable for like 1 to 3 months, then you can start scaling up the money that you're using. I would prefer that you're profitable for at least 3 months. 3 months consistently profitable, because the market conditions are always changing. So strategies aren't always working for the most part. So you will have to learn nuances of how the market works, of how to respond to certain market conditions, how to respond to this and that. These are things that only experience can give you, not me. Nobody, even not a mentor, can give that to you. Experience is going to be your greatest teacher, but if you have a mentor, it will certainly accelerate it and make you profitable. But once you can become consistently profitable with small amounts of money, then you can start to slowly scale. Like let's just say you start learning how to trade the $100, you're consistently profitable for a month, and you have a lot of money. Then you can start trading with like $1,000, 1x leverage. Then you can start moving up to 3x leverage and 5x leverage. Then you can start scaling up. You start with 1,000, grow that, or you can start trading that consistently. Then you can trade with 2,000, then 3,000, then 10,000, then 50,000, then 100,000. It scales up. And every time you trade with different levels of money, different leverage, it's going to feel different. There's different emotions. There's different experiences. So start low, start as a beginner. I know you want to move fast. Typically, we all want to naturally as humans move quickly as fast as possible. But in trading, you have to be slow. You have to be patient, and you have to let the process live. Let the process work for you. It takes time. If you can be consistently profitable trading on your own for 3 months, then you can start slowly scaling, and then the world is yours. Make sure you guys follow me on Twitter, that you join the Patreon for my trade signals. Use Algosniper. You guys can try today for $1. I have a mentoring program. Guys, send me a DM on Telegram or Instagram if you guys are interested in the mentoring program. It's a whole year where I'm going to teach you every strategy, every market condition, anything that you need to know, how to be consistently profitable like myself. That's going to be available to you. So guys, just send me a DM, Twitter, whatever it is, and we could talk about the mentoring program. Also, make sure you guys are trading on my Blofin link for those special discounts, free money, and a whole bunch of great things. If you guys got something out of this video, make sure you give this video a thumbs up, that you are subscribed with notifications on. I'll see you later.